Morning, everyone, and thank you very much for joining me. This is the morning market review. It's Monday, it's the 24th of October. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address rshaw@fxcm.com. Just going to go ahead and bring up our high-risk investment warning. I'll keep this on screen for a few moments. Just want to do a quick sound check and confirm that you guys can see the screen, the high-risk investment warning. Just let me know. Hey, Zanetta, morning to you in the webinar. Okay, excellent. Just bringing up the market commentaries disclaimer. And our references, MarketScope, TradingView, and Bloomberg. Just want to find my TradingView here. Right, so I'm just going to keep this on screen for a few moments. In the meantime, let's go through the Bloomberg email, which is 5 things to start your day. The first headline is UK race. Rishi Sunak took a huge step towards becoming the UK's next Prime Minister after Chancellor of the Exchequer Jeremy Hunt endorsed him and former Premier Boris Johnson pulled out of the contest. In a statement on Twitter late Sunday, shortly after Johnson said he wouldn't stand for fear of dividing the Conservative Party, Sunak vowed to lead with integrity, professionalism and accountability if he won the race for number 10 Downing Street. Sunak faces House of Commons leader Penny Mordaunt in what is now a 2-person race. The pound got a lift on expectation that a potential premiership under Sunak, himself a former chancellor, could help fix the nation's battered finances. The next headline reads China syndrome. China's markets delivered what appeared to be a stark rebuke of President Xi Jinping's move to stack his leadership ranks with loyalists. The one was under pressure and a gauge of Chinese stocks in Hong Kong slid to the lowest level since the depths of the 2008 global financial crisis. An index of Chinese technology companies was in sight of a record low. Xi's power is at a new zenith after the Communist Party Congress. That signals little respite from the economically costly COVID-0 policy of lockdowns to fight the virus. Nor do investors appear to hold out much hope for a rejuvenation of private enterprise under China's most powerful leader since Mao Zedong. Next headline, ECB primed. The European Central Bank is priming another hefty hike in interest rates this week as the attention increasingly switches to how high it will eventually push. A second straight 3/4 point increase, an increment that appeared almost inconceivable earlier this year, but is becoming the norm after 3 such moves by the Federal Reserve, is all but a done deal on Thursday, bringing the deposit rate to 1.5%. Few reckon it will settle there, but investors and economists wonder how far it can be lifted as an energy-driven recession threatens to engulf the Eurozone and households grapple with surging heating and mortgage bills. The fifth headline, dirty tactics. Russian Defense Minister Sergei Shoigu called his counterparts in the UK, France and Turkey, warning of a drift towards uncontrolled escalation in Ukraine and the potential for Kiev to detonate a radioactive dirty bomb. The US called the allegation transparently false, as Shoigu and US Secretary of Defense Lloyd Austin spoke for the second time in 3 days. Ukraine has consistently denied any such plans and did so again yesterday. Okay, just the last few bits and then we'll do some analysis here. European stocks look set for gains even after Asian shares struggled amid the slump in China. UK leadership contenders face a 2 p.m. deadline to certify the support of at least 100 MPs to make the ballot. Data include French, German and UK PMIs. Philips announced a restructuring and a cut in its workforce. All right. Let's see what we can see on the charts. All right, Katie is just asking me if we'll go through the calendar today. Yeah, we certainly can. We probably should do it actually on a daily basis. It's not in my resources list, but I'm just bringing this factory across. All right, so the China data is out. Let's just see what we've got for the European session. So we've got the services and manufacturing PMIs. These are the flash PMIs, so they the preliminary PMIs. Okay, and then later we've got Yellen speaking from the US and Ramsden from the UK, but I don't see anything sort of. I think let's go into the charts. All right, so we'll start off with the real rate here. We've got, this is the daily chart, the daily real rate at the top. We've got the US dollar at the bottom. And there's actually a little bit of a divergence, not quite a divergence, but perhaps a lag from the US dollar. Okay, so we've got the real rate moving in this northeasterly direction. The dollar does have a slight, you can't see it, it does have a slight positive slope, but it's certainly not as pronounced as on the real rate. Let's bring in the correlation here. Let's just take a look. It looks like there may be some sort of break at the moment. Let's just see. So it kind of dips from this point. So from about the 13th, 14th of October, so about 10 days ago, there's a dip in the correlation. In other words, as the real rate moves up, dollar sort of holding flat. But there is a kick up over here. We'll just have to carry on monitoring this chart. Let's just do the last few candles here. So the real rate does show signs of moderation here, which you want to keep an eye on, right? What I mean by signs of moderation, so there is signs of a reference candle there. Okay, and yes, conditions 2 and 3, and then with that reference candle, the bearish reference candle, the dollar actually does take a hit here. Let's perhaps just go down, go up to the weekly, see if it makes it a little clearer. I'm just bringing back that correlation. Okay, so the weekly correlation is still at 92%, so it's very strong on a weekly basis. Just going back to that daily. And we just want to keep an eye on the divergence here. So we've got this a higher real rate. It certainly has a dip here, and it may be so. There's obviously two. I think there's two potential outcomes here. Number one, dollar may be lagging. Dollar may be lagging, or the real rate's lagging. So it's one or the other, right? But considering the weekly is still very strong in terms of correlation, I still think the direction of the real rate is probably the cause, and I think the US dollar is probably the effect. So if the real rate continues to move up, I think it will pull dollar with it. If there is moderation in the real rate, I think it will again drag dollar with it. So whilst there does seem to be some sort of slip up in the correlation, which is fine. I mean, correlations don't hold. They ebb and flow as well, just like any other trend. So we'll just carry on keeping an eye on that. Let's go through to this chart here, right, which is the US dollar. We'll do a top-down analysis on market scope. Let me just see, there's a few questions coming in here. Hey, Howard, nice to have you on the webinar. All right, and then okay, so Rob's introduced he's introduced something quite interesting here. He says the Japanese yen may have had an effect on that correlation. All right, so let's take a look at the US dollar. We'll do a top down on the US dollar, then let's go through to the US dollar Japanese yen, which I think is really interesting. The weekly for the US dollar is certainly strong. We've got the series of higher troughs followed by higher peaks. The momentum is in the upper quintile. Again, when we're looking at a stochastics, no such thing as overbought. Okay, when you actually look at the formula, there's no ways that you can put an overbought. It doesn't include an overbought, oversold condition. So I just want to be very clear there. And you can see that as long as it hugs the upper sort of quartile, upper quintile, the momentum supports price, and there's of course an enormous trend here. The RSI does a much better job of overbought and oversold. It's not overbought. Okay, so there is some certainly positives on the weekly, and if we go through to the daily, this is interesting. So we've got the daily, which has disconnected from the weekly. Again, Rob, we'll take a look at the Japanese yen. Perhaps that's what we're seeing here. But the daily has fallen into zone 2, and that's the neutral area. So I want to just go back to this chart here. It really now, I think, is a function of what happens on the real rate. The dollar, you can see here, is okay. We're looking at the daily here, so it's much flatter than what we've seen in the past with regards to its correlation with the real rate. Here, the real rate perhaps going to pull the dollar back into zone 1, but we're not in zone 1 yet. We're in the neutral area. Again, that theme of ambiguity that we were talking about last week persists here. It's not a great place to be in as a trader, because when you're in no man's land, you're in no man's land. It's much easier to trade trends than it is to trade ranges. So this looks sort of rangy at the moment. Let's just go down to the hourly. All right, so you can see the stochastic has started to push up on the hourly, but the trend indicators, so stochastics is momentum, moving averages are trend, right? They haven't crossed over yet. So again, even on the hourly, there seems to be some sort of ambiguity, and that to me suggests that we need to be a little bit more patient than perhaps we want to be, because it's Monday, right? We want to get back into trading, but I think the fact that we have these zone 2 on the daily, the fact that there is a lack of signal on the hourly, we just need to keep disciplined here. Let's take a look at the US dollar Japanese yen, which I think is I think this is a very interesting analysis that we're about to do. All right, let's just go through to the US dollar Japanese yen here. I don't like this currency at all. I really don't. Let's just go through to the monthly chart, and you'll see why. Okay. All right. Now, this is on a logarithmic scale. Okay. So now, once you've gone onto a logarithmic scale, what looks like sort of on a normal, when you change from arithmetic to logarithmic, typically, so when it looks like, if you take a look at, I'm just trying to think of an example. I don't want to bring it up here because there's compliance issues, but if you take a look at sort of the early charts of Bitcoin, it jumps like a rocket ship on an arithmetic scale. As soon as you put it to a logarithmic, it flattens out. It becomes a much more sensible trend, and that's because logarithmic is looking at on a percentage basis as opposed to sort of a arithmetic scale. Let me tell you exactly what I mean. If you have an instrument that costs $1 and it moves to $2, okay, so 1 to 2 isn't obviously an increase of 1, but on a percentage basis, it's 100%, right? If you've got an instrument that's at 10 and it moves to 11, well, it's still moving by 1. So you've got 1 on both of the examples, except one is a 100% move and the other is a 10% move. That's what logarithmic scale discerns. Okay, so the fact that you've got this rocket ship on a logarithmic scale is frightening. Okay, it's unsustainable. At some stage this is going to break. Now I don't know when. Okay, but this is pure market manipulation that you're seeing here. It's what we call a parabolic move. It's taken off like a rocket ship. And you can see that there is obviously very strong momentum. We would certainly expect that. Take a look at the RSI. RSI screaming, absolutely screaming that this is an abnormal move. Okay, but it can't do anything about it. Can't do anything about it because there's market manipulation that's going on at the moment. So we can't even go down to a lower time frame because what's effectively happening here is the Bank of Japan is defending the 25 basis points level on what's called the JGBs, which is the Japanese government bonds. So you go through to JP10 and put in Y for yield, bring that in, Okay, and we'll just put this on a weekly. And you can just see every time the JGB hits that 25 basis points, it gets pushed back. So the market's trying desperately to get above 25 basis points. Every time we hit that level, okay, the Bank of Japan comes in and just completely manipulates the bonds. So how does it do that? Well, it will buy bonds. It will just load up bonds onto its balance sheet, because the more it buys bonds, the more it supports the price, well, the greater the pressure on the yield. We know there's an inverse relationship there. All right. So this is what's happening. So then what you can do, just to see how the market manipulation is affecting prices, what we'll do is we'll take the US 10-year, we'll take off the Japanese yield from that. Okay. So now we're looking at the spread between the two countries, 10 years. And, well, you get a parabolic move here as well. And then you can put the US dollar underneath. I beg your pardon. You could put the US dollar Japanese yen underneath. Okay. And all right. And here is the here's the chart. Throw in the correlation coefficient as well. Right, we're at 94%. Okay, so the market manipulation having a direct effect on the US dollar Japanese yield, but it's unlikely that this can go on indefinitely. It can't go indefinitely. So the question then asks, what's going to happen when the Bank of Japan either announces it's going to stop defending the 25 bips level, or it announces it's going to change its defense from, say, 25 to 35 or 25 to 40. Well, we say this is a parabolic move. Okay, so this is but if you know what a parabola is, a parabola is this. Okay, so at some stage is a turning point, right? So, and this is actually a big business risk for a lot of businesses, because as soon as the Bank of Japan, and they will do it at some stage, announces that they are stopping the defense, okay, the market is just going to, it's going to push the bond prices way above 25 basis points. JGB prices are going to drop like a stone, and the yen's going to drop like a stone. And whoever's long US dollar Japanese yen is going to have a even if they've got a stop loss there, their stop loss not going to catch the drop. It's going to be triggered way past the stop loss. So it's going to be really a it's going to have a huge effect on the markets. So this is all fun stuff to look forward to. I don't know when the Bank of Japan is going to abandon their defense. It might be sooner, it might be later. The later it does, the more overbought this is, the worse it's going to be when they do. Okay, and we can actually go to the Euro Swissy. I don't really have, we'll use the US dollar Swissy here, just as an idea of what happened. So if we go back 2015, it's easier to see on the Euro Swissy, but this over here, okay, decimated a lot of accounts and a lot of companies. Okay, because this is where the Swiss National Bank stopped defending 120 on the euro Swissy. So I don't know if it's going to have the same sort of effect, but the longer the Bank of Japan defends the 25 basis points, well, the more the misallocation, and the greater the misallocation, the greater the potential energy. And once that gets the opportunity to convert to kinetic energy, well, that's what's going to cause a parabolic movement to actually become a parabola. S&P news starts in 10 minutes. I have no idea what that is. Is it on the calendar? The French, okay. The services PMI, yeah. So we'll see some perhaps some movement here on the PMIs. These are preliminary, okay. These are preliminary. These aren't final, but it's about 80% of the numbers that have been counted. All right, let's take a look at Nasdaq and oil. Actually, let's do Nasdaq on this chart here. And let's make it the daily. Yeah. Let's change this down to NAS 100. All right, so let's make this weekly. All right, so what we can see here is, of course, the correlation between the real rate and the Nasdaq. Still very much in play, right? We've got an 80% negative correlation here. So again, I think the driver here is the interest rates. Let's just go down to the daily. And what we can see here is all right, so I think we want to see if we get this reference candle. If we get conditions 2 and 3, okay, if we get conditions 2 and 3, which we'll know by the end of the day, then you can see that the Nasdaq's actually starting to kick up here, isn't it? Okay, which would make sense given the negative correlation. So we want to see that, and then let's just go through to we'll look at oil shortly. Let's just go. Zanetta pointed out that in the Mars now. Okay, so we'll just see if the euro is reacting to that. Let's just take a look. Just waiting for these to come through. We'll go through to the euro. I'll just bring euro up. All right, so let's just see here if there's any. Maybe sort of when the German numbers come through in the next 15 minutes, probably more of an effect. Manufacturing beating, but still not great, right? French manufacturing contracting, it's below 50. As services above 50, so it's holding just sort of on that expansion level. I think the big deal for the euro, is of course going to be ECB, which Thursday. That's going to be the big deal. So we'll keep an eye on that, obviously closer to the time. Let's just go through to oil, see what's happening here. I'll bring up US oil. All right, so the oil still very much trending down in terms of peak and trough analysis. The momentum certainly has halted. So the downside momentum is not as strong as it was from sort of July through to October. What's difficult here, this is actually probably a good sort of exercise. You see this? I suppose it's okay. What I was going to say is if we're using this as a reference candle, because it's so long, it makes it very difficult to do the analysis on the reference candle, because then we're going to have a whole host of inside candles. But actually, this would be the reference candle, I think, on the weekly. At the slightly higher price, and if that is then I think KD, if we drop below this level, that demand destruction continues, right? Because then I think we get that LP, we can take out the question mark. And if we go down to the daily, then we're probably back in zone 3. So at the moment we're in no man's land, right? But you can see that the momentum does to be heading towards that lower quintile. So I think there is a case to be made for a bearish oil price. Just to reiterate, how so? Well, we certainly are in a downtrend. That hasn't changed. We may get a reference candle which locks in the next lower peak in the series. And then if we go into zone 3, well, then we've synced up on the daily and the weekly. On the hourly, you can already see the crossover here. Okay, and of course, the stochastic, it will be very important. If we hold out at that lower 20, of course, the oil probably has some downside pressures. Let's just take a look at this calendar. I just want to go through to Thursday, 27th. And this is so yeah, at 2:15 ZA, so it'll be 1:15 UK. Yeah, main refinancing rate, monetary policy statement, press conference. So this is going to be big for euro. Okay, so all R's. This is the event for euro for this week. All right. Any other questions? Please type those through. Incidentally, take a look at this comment here. Japan's Prime Minister, we cannot tolerate excessive FX moves based on speculation, which of course it's not speculation. There's no interest because it's been artificially kept down. Money's going to flow to the high return areas. Yeah, so something's going to give here. Alrighty, let's wrap up here. Have a good day ahead. Good evening. We'll chat tomorrow. Thanks very much, guys. I didn't watch the rugby. I didn't watch the rugby on the weekend. Are you referring a Women's World Cup, Rob? 75. I didn't watch it. I'll Google that. I'll take a look. All right, guys. Let's wrap up. I'll speak to you guys tomorrow.